Good morning, everyone. We were just waiting to join the people. Yes. Good morning, everyone, and warm welcome to webinar conducted by GKFS. I am Prajakta from GKFS. Before starting, I must mention few points that this webinar is being recorded. Hope you all will fine with this. And if you have any concern or any issues, you can message your concern in chat box. Yes. So now without wasting our time, I will quickly start. With more than decade of experience in managing personal finance, GKFS have been helping busy dynamic professional clients in creating, protecting, managing and distributing their wealth to achieve financial freedom and ultimately peace of mind. GKFS India is one-stop solution for your financial needs. We are providing services to our clients for mutual fund investments, insurance, taxation, will and succession planning. Uh, I'm glad to announce here that after this webinar, you will be, we will be, sorry. After this webinar, you can book free 30 minutes one-to-one consultation with our expert panel for your queries, and second thing is we will email you a free NRI handbook from GKFS to all our attendees. Yes. Now let me introduce our today's speaker, Mr. C.A. Sagar Somant. Sagar's professional background encompasses extensive proficiency in NRI taxation, cross-border investment, FEMA compliance, and income tax advisory. With an illustrious career spanning over 18 years, Sagar possesses a wealth of expertise across diverse domains, including personal income tax, financial management, FEMA compliance, banking and finance, cross-border investments, auditing, cash flow analysis, and accounting. His principal passion lies in aiding high net worth individual and NRI in attaining financial freedom and peace of mind. His professional journey encompasses tenures at eminent establishment such as Big Four consultancy firm, PwC, PricewaterhouseCoopers, and Economic Law Practices, Mumbai. He is certified information system auditor and holds a master degree in international business from esteemed Leeds Met University, UK. Now I will request Sagar sir to start his presentation, and after his presentation we will have Q&A session. So I request all attendees to post your queries in Q&A chat box. Over to you, Sagar sir.
Thank you, Prajakta, for your kind words. Special thanks to Shailesh and Team GKFS for organizing this webinar. GKFS has a dedicated NRI desk to cater to the specific needs of NRIs like taxation, regulatory and financial aspects. GKFS has a local presence in UK. Two team members are located in UK. As Prajakta mentioned, I have done my masters in the UK, then went back to India to work in Big Four tax firm, and then again came to UK for a few years on a work visa. So I have first-hand experience of working in both countries and managing the taxes and finances. My sister is settled in UK. She is a doctor with NHS, and I have been managing her portfolio for almost 2 decades now. Whether you are an established investor looking to expand your portfolio, or monthly investment planning, or for lump sum investments, or someone intrigued by the Indian market, this webinar is designed to cater to all levels of expertise. Over the course of this webinar, we will explore how Bharat promises to be an attractive investment proposition, discuss key investment strategies, regulatory framework, and the taxation aspects. We will also cover some FAQs for NRIs. Meanwhile, if you have any queries, please post in the Q&A section and we will answer them after the presentation. At the outset, a standard disclaimer: this presentation is for general information purpose and should not be construed as a financial, legal or other advice. For any specific advice, you may contact us and we will be happy to help. I will not get into any technical jargons and would like to keep it simple. Just a few key indicators to show you how investing in Bharat is as spicy as our cuisine is. This data shows returns for the last 5 years and the returns have been phenomenal. As can be seen from the chart, India has given highest rolling returns. Indian equities have outperformed all other asset classes, including gold, real estate, US stocks, and debt over the long run, and with over 17% returns in 20 years. What this means is that if you had invested 1 lakh in Indian equities 20 years back, it could have grown to approximately 24 lakhs by now. However, the value of same investment in the US equities would have given you a return of 11.3 lakhs in 20 years. So it's about twice the returns that US has given in the last 20 years. That was the performance comparison with top performing markets. Now, when we compare with the 10 large emerging markets, India ranks first in the latest emerging market tracker data by Bloomberg. This is the
Sorry to
latest.
interrupt you, sir,
Yeah.
but your screen is yet to visible presentation.
Yeah. Is it visible now?
No, sir.
Is it stuck, Prajakta?
No, sir. It's not stuck. We can see your photo on the screen. The presentation page yet to share.
So my presentation is not visible?
No, sir.
Is it visible now?
Yes, sir.
Great. Sorry about that. So I'll just take you through the slides earlier ones. This is the rolling returns data for the last 5 years, which we mentioned. Then the returns given by Indian markets for the last 20 years. And this is the emerging markets data. So India has performed it is the fastest growing emerging market in the world. So now that we know about the phenomenal returns offered by India, the most important question comes to our mind is that whether NRIs are allowed to invest in India. The answer to this is absolutely yes. India welcomes NRIs to invest with open arms. It's like getting an invitation to the biggest financial party. You can park your money in bank accounts, stock markets, real estate, and even join the startup fiesta. Just remember, your investments are perfectly safe and legal in India. Now let's explore the regulatory framework and the taxation aspects for NRIs. First and foremost is the residential status. Many people get confused with this. In India, residential status is determined by two different laws, and having a basic knowledge of both is very important. Residential status in India, as per the Foreign Exchange Management Act or FEMA, and for income tax purposes are two distinct concepts, each governed by its own set of rules and criteria. Let's understand the difference between the two. Income Tax Act is a revenue law which impacts the calculation of tax liability, exemptions available, etc. Whereas FEMA is a stricter regulatory law which governs the foreign exchange transactions. Think of FEMA as the gatekeeper to India's financial playground. It's all about who can swing on the forex swings and who can't. Income tax, on the other hand, is like the bill collector at the party. It wants a slice of your income cake, no matter where you are coming from. In income tax, residential status is determined by the number of days stayed in India in the previous financial years. For example, a person is resident for previous year if he is in India for 182 days in the previous year or 60 days in the previous year plus 365 days in 4 preceding financial years. Whereas as per FEMA, it goes according to the intent of the person. As per FEMA, person resident in India is a person residing in India for more than 182 days in the preceding financial year. If the person leaves India for the purpose of employment, business, or for any other purpose that indicates his intention to stay outside India for an uncertain period, then he becomes a non-resident from the day he leaves India for such purpose. Residential status is checked every year at the time of filing income tax return for the previous financial year. This is for income tax. Whereas for FEMA, residential status has to be checked as on the date of financial transaction taking place. So every time you are taking money out of India or dealing in foreign exchange, you have to check the residential status. During a particular year, the residential status can either be resident, non-resident or RNOR as per Income Tax Act. But as per FEMA, the residential status can vary as per the date. So the status can be multiple in 1 year. Whereas for income tax, it's always only one residential status for one financial year. So how does this really matter is, as per FEMA, there are certain things which are prohibited to be done if you are a non-resident. So you have to take care of all those compliances when you are a non-resident as per FEMA. Even a resident is barred from taking certain international transactions, or there are certain restrictions in getting some international transactions done. So you have to be aware of what the residential status is as per FEMA, and only those transactions can be undertaken. Coming to banking, most important and often very confusing part, bank accounts for NRIs. Here we have covered three main type of accounts, NRO account, NRE account and FCNRB deposits. So NRO account is a rupee denominated non-repatriable account. As soon as you update your KYC as NRI status, the existing saving accounts or current accounts that you hold in India get converted to NRO accounts. An NRI can also open new NRO account. NRO account helps an NRI to manage their income earned in India. A non-resident ordinary or NRO account is a popular way for NRIs to manage their deposits or income earned in India, such as interest, dividend, pension, rent, etc. This account allows you to receive funds in either Indian or foreign currency. However, only Indian currency can be withdrawn as NRO account are kept in Indian currency and cannot be freely repatriated into any other foreign currency. Coming to NRE account, as an NRI, you might feel the need to have an account in an Indian bank where you can deposit and keep all your foreign currency savings in Indian denomination. In such a case, an NRE account is an ideal fit for you. An NRE account or non-resident external account offers you this facility. Here your money is converted into Indian rupee or INR at the time of deposit. This means that you can deposit money in any foreign denomination, for example pounds, and withdraw it in Indian rupees. Based on your personal requirements, you can choose from various types of NRE accounts. These can be saving account, current account, recurring account, or fixed deposit accounts. The principal amount invested from NRE account is always freely repatriable. So the principal that you invest in India, you can take it outside India without any restrictions. Only the income that is generated on the NRE account, on that you need to pay tax and get clearances done. Third one is the FCNR deposits. These are forex denominated repatriable accounts. FCNR accounts are term deposit accounts and not saving account. The interest that you earn on your deposits on FCNR account is tax free. That is, it is not taxable in India at least. So if you are an NRI, is it mandatory to close the resident saving account on becoming NRI status? If your residency status has changed to NRI, then having your saving account converted to NRO account is mandated by the law, which is FEMA Act. It is mandatory for a resident to inform his bank within a reasonable time when he becomes an NRI as per FEMA. Now, what is reasonable is not defined. In practice, the number of persons who fail to inform their banks is so large that the default is almost overlooked unless the authorities suspect a foul play. However, it is to be remembered that the default for this penalty is very heavy. It is 5,000 rupees per day. So it is always better to get your account converted to NRO account once your status has changed. Now, when we say non-repatriable funds, actually funds from NRO account cannot be freely repatriated into any foreign currency. In practice, thankfully, it is repatriable. Well, almost. The Indian rupee has virtually become fully convertible. NRIs are permitted to remit assets of up to $1 million per financial year, which is about 8 crore rupees per annum. This allowance encompasses balances held in NRO account, which may consist of proceeds from sale of immovable property like flats acquired by the NRI using funds from India or any other investments made within India. These remittances are subject to satisfactory completion of specific regulatory and tax requirements. We offer assistance in facilitating the necessary regulatory compliance and documentation to facilitate these transactions. India serves as an attractive destination for NRIs to park their investable funds, where capital growth occurs at an accelerated rate. This unique investment prospect should not be overlooked merely due to the newfound ability to convert rupees into foreign currency and remit them overseas. Consequently, retaining one's investments within India should be regarded as a prudent long-term strategy. Coming to the taxation aspects for NRIs. The Indian Income Tax Department has become very tech savvy now. The e-filing portal of Income Tax Department aims at providing taxpayer convenience and a modern seamless experience. Some of the impressive statistics can be seen here. The average time taken to process income tax returns is just 10 days now. Almost all interactions, ITR filings and communications from department, income tax forms, submitting response to notices or even faceless scrutiny can be accessed through this same dashboard. So gone are those days when you need to visit to the department or go through the red tapeism and all. Everything is online nowadays. Income Tax Department is constantly tracking information for all taxpayers, irrespective of whether you file ITR or not. Annual Information Statement and Taxpayer Information Statement are the two annual reports which show details of all transactions carried out during the year. AIS displays details of property purchases, high value investments, TCS transactions carried out during the financial year. AIS additionally includes saving account interest, dividend, rent received, purchase sale transactions of securities or immovable properties, foreign remittances, interest on deposits, GST turnover, etc. Any information reported here, if it gets omitted in the income tax return, can attract a notice. So basically, they can track down even the interest that is getting generated in your saving accounts. So many NRIs have this query that TDS gets deducted on my rental and interest income in India. Do I still need to file ITR every year? Yes, as per section 139(1), it requires a person to file ITR if his income without claiming deductions exceed minimum exemption limit. Non-filing of ITR attracts penalties and scrutiny notices may also be issued. As seen in the previous slide, AIS-TIS report provide extensive summary about your income, TDS and system generated notices get issued in case of non-reporting or non-filing of return. There are certain special facilities for NRIs like no need to link Aadhaar card with PAN card, no need to disclose foreign assets, foreign bank accounts and income in the Indian income tax returns. So you should avail this facility and the return should be filed. Now, should you file Indian tax returns even if income falls below the specified threshold, that is below 2.5 lakhs? Despite various reasons that may deter NRIs from filing returns, such as low income, busy schedule, or perceived redundancy due to TDS, adhering to this legal requirement can offer significant benefits. Listed here are a few reasons why NRIs should file their tax returns even if their income falls below the specified threshold. Substantiating residential status and income sources so that foreign income is not taxed in India. Facilitating property transactions. Claiming refund for TDS deductions. Carry forward of losses for future set-off. This is only available if the ITR is filed before the due date. Enhanced financial eligibility for taking loan and for having a healthy credit history. Reporting financial transactions and exempt income to avoid potential scrutiny notices. Establishing transparency with tax authorities. So it's advisable to keep filing your return every year in India. Can NRIs hold Aadhaar card? Yes, NRIs are also eligible to enroll for Aadhaar. An NRI, whether minor or adult, with an valid Indian passport can apply for Aadhaar from any Aadhaar Kendra. While enrolling as an NRI, Indian passport is a mandatory proof of identity. So OCI holders won't be allowed to hold a Aadhaar card. However, please note that international mobile numbers are not allowed and only Indian mobile numbers can be provided. So if you are an NRI holding an Aadhaar card, you can use Aadhaar linked mobile OTP for e-verification of ITR. Many NRIs are facing problems since their PAN has become inoperative on account of non-linkage with Aadhaar. As per section 139AA of the Income Tax Act, assessees having Aadhaar are required to link their PAN with Aadhaar. The due date for linking PAN with Aadhaar was 30th June 23. However, this section exempts linking of PAN with Aadhaar for non-resident assessees. However, in case if you have not filed any returns in the last 3 years, then your PAN may have become inoperative and needs immediate attention. You can get in touch with us if this is true in your case as well. So if you have income in India, then do you need to pay tax on income in India as well as in UK? Basically, NRIs can avoid double taxation, that is getting taxed twice, by seeking relief from DTAA, which is a double taxation avoidance agreement. It is a bilateral agreement between two countries aimed at preventing double taxation of same income and assets of individuals and businesses that are resident of both countries. India has signed DTAs with more than 90 countries, including UK. However, disclosing income in both countries and offering differential tax may be applicable. So for example, in India, on a particular income getting generated in India, the tax rate is 10%. You pay tax on it. You go to UK and file that in your income tax return showing that you have paid tax at the rate of 10%. But if in UK the tax on that particular income is 20%, then differential 10% may have to be paid in UK as well. So differential tax may apply, but you will always get a credit of whatever tax is paid in the other country. And this is applicable with 90, almost all good countries of the world. Finally, coming to the investment options for you to participate in Bharat growth story. Good investments are characterized by 5 critical parameters. Firstly, liquidity is essential, allowing you to swiftly access your assets when needed, ensuring financial flexibility. Second, these investments should generate returns that outpace inflation, preserving and growing your purchasing power. Third, the risk should be tolerable, aligning with your comfort level and financial goals. Fourth, effective net tax returns are crucial, optimizing after-tax gains through strategic planning. Lastly, peace of mind should accompany your investments, stemming from aligning them with your objectives and risk tolerance. By considering these parameters, investments can offer both financial security and emotional assurance, fostering a sound financial strategy. Investments tailored to meet specific life goals are crucial for financial success. Whether it's a saving for a child's education, planning for retirement, or preparing for child's marriage, investments can be aligned with your unique objectives. For monthly recurring investments, systematic investment plans in mutual funds can be made. For lump sum savings parked in India or UK, mutual fund or PMS, which is portfolio management services, can be selected. There are also investment products in India which provide tax-free returns. These are ideal if you are planning to retire in India. Insurance can also be taken by NRIs. The process is online and seamless. In case of capital gains arising from sale of house property in India, we can help in planning tax saving and reinvestment of sale proceeds in India. This is a trademark solution of financial freedom by GKFS, where GKFS can help you in analyzing your current finances, prepare cash flows, help identify financial goals, and then work towards achieving the target and ultimately help achieve peace of mind for you. Now, last slide, investment in real estate for NRIs. Is it a good idea? Many NRIs treat purchase of a house as an investment offering hedge against inflation. Housing loan in India is cheap and the tax concessions make it cheaper. However, investing in real estate in India as an NRI can be challenging due to various factors. First is the regulatory compliance. For example, agricultural land, farmhouse, etc. cannot be purchased by NRIs. Then there are tedious property documentation and due diligence, funding restrictions regarding source of funds for property transactions in India for NRIs. Then taxation on rental income and capital gains. The TDS rate for NRIs is 31.2% for rent, which significantly impacts the cash flow. Property management and tenant issues is another aspect. So apart from the regulatory issues mentioned here, most important factors to consider are the 5 parameters of good investment. Does it fit in terms of liquidity? Risk involved in many factors mentioned above. And then one important issue is that TDS on sale proceeds or rental income, which is 31.2%, severely impacts the cash flow for NRIs. Even if we compare the returns for the last 20 years, equity market far outperformed the real estate. Taking the same example as earlier, if you had invested 1 lakh in Indian equity 20 years back, it could have grown to approximately 24 lakhs by now. However, the value of same investment in real estate would have given you around 5.6 lakhs in 20 years. So the comparison is between 5.6 lakhs and 24 lakhs. So real estate as an investment option needs to be carefully assessed. Thank you. If there are any questions, then we can take them now.
Thank you so much, Sagar sir, for your enlightening, insightful presentation. I will request attendees if they have any questions, they can put in the chat box so that we can answer. We will try to answer as much as possible we can. If if there is any issue to put your messages in chat box, you can WhatsApp me. I have send message everyone for the webinar, so you can put your messages to WhatsApp as well. I will try to answer them. Yeah, we just received one question that I have almost completed 2 years in UK, but I yet to convert my bank account status. I tried. Okay, so you want to check that whether you have to convert your bank account status or not. Is this your question? I'm considering this as your question, and sir, request you to say something on it. Yeah.
So basically, as per FEMA, once you leave India with an intention that you're not coming back for a definite period, so if you go for employment or as a student, if you leave India, then immediately on the date of leaving India, you become NRI, and your bank accounts need to be converted to NRO status. So saving account or current account held in India needs to be converted to NRO status. That can be done automatically by updating your KYC with the banks. If you have not done that, then it is advisable to get it done as soon as possible. As I said, most of the people don't get this done in a reasonable time, and the government does not go after them. But as per FEMA, the penalties are very heavy. It's 5,000 rupees per day. So please get it done as soon as possible.
Yes. So another question is there that I have HUF in India. What happens to the HUF income as per UK taxation? Uh,
For HUF, again, there are a lot of tax complications, like who is the Karta of HUF, what is the residential status of Karta. Based on the residential status of the Karta, the HUF residential status will depend, and accordingly the tax planning or the taxation will happen. So we can take this on a one-to-one basis. Prajakta, we can take it on
Definitely, sir.
later on. Yeah.
Yes, yes, sir. So I'll request you to post your. I mean, we will get connected one-to-one basis, and we will try to solve your query later.
Yeah.
Yes. Another question is, what is the tax liability on mutual fund purchase or sale for NRI? Uh,
Sorry, I did not get it.
yes, Sagar says. So the next question is, what is the tax liability on mutual fund purchase or sales for NRIs? This is
So mutual fund is taxed similarly as for a resident. What is the if it's a equity mutual fund, then the tax rates are different. If it's a debt fund, then the tax rates are different, and it is taxed similarly as what you would tax for resident Indian. And then as per the Income Tax Act, whatever income is getting generated in India is taxed in India. So you have to pay tax on your income what you are generating in India, and then the balance you can either take it outside India or you can reinvest in India.
yes. One more question is there, sir. If property owned for say 20 years and you sell it, Will it attract 32% tax on capital gain?
The tax on capital gains is not 32%. The TDS is 31.2%. So when the buyer will make a payment to you, he will deduct 31.2% TDS. So if he is paying you 1 lakh rupees, he will deduct 31,200 rupees as TDS deposited to the government, and then you can claim it back after paying your taxes. You can claim the balance back by filing a return of income. So what happens is, if say you during the year you are selling your property, 31.2% TDS is getting stuck as a your cash flow will get blocked. Till the time you don't file your return, you won't get the money back. So that is the problem for real estate transactions for NRIs. The TDS rate is too high. And that is same even for rental income. So even if you just put your property on rent, even if the rent is as low as, let's say, 5,000 rupees, still the TDS rate is 31.2% for NRIs. This is the highest slab rate for NRIs.
Okay. The next question is, I want, yeah. So, in yeah, so the attendee is trying to ask that he trade in Indian stocks from UK, and is there any extra charges which accounts to extra charges, then which account to use for buying stocks with demat account, NRE or NRO, which is the secure way to buy UK and US stocks? What is ISA account? So, sir, probably we will take this query personal, or you would like to
Yeah.
enlighten it. Yeah.
So basically, you are absolutely allowed to invest in India. There are certain restrictions as to how much you can invest in India, but for small retail investors, it is definitely allowed. If your income is, if your money that you are investing in India is already tax paid and it is generated out of your UK income, then it is advisable to invest through the NRE account, so that you can freely take back the principal amount whenever the profits are generated. And if the money is already in India, then investing through NRO account would be advisable. We can take the detailed query in one-on-one session, but then of course you can invest in India. You are allowed to invest in India freely.
Okay. And probably the last two questions. Uh, One attendee wanted to know that what will happen to mutual fund and shares which they have bought as an Indian residence.
So when you were in India, you bought shares or mutual funds. Whenever you do the KYC for that demat account, it gets automatically converted to the NRO KYC. So it will become a non-resident demat account, and you can still hold it. You can redeem it. You can buy more securities and all. Everything is allowed. Only the status will get converted to a non-resident status. That's it. So there is no problem in that. It's better to get it converted to the NRO status.
Okay. Then I transfer loan amount to account and not to saving account. What tax clause says about it? Can you elaborate about this question more? Uh, I can see this question in Q&A, or else we can connect you after the webinar and we'll be able to give a proper solution for your query. Sir, do you want to say something about this?
I did not get the question. Transfer loan
Yeah,
amount to loan
yeah.
account. Yeah.
If I transfer loan amount to loan account and not to saving account, what tax clause says about it? So probably,
I did not get what kind of loan is this.
okay. So I request you to connect with us on personal basis so that we will be able to understand your question, and accordingly based on that we will be able to provide the solution. Sir, one more question is there. If pension is paid from UK and I am in India, is tax deducted in India?
No, the source of income would be UK. So anyway, whatever pension is getting paid to you is tax paid in the UK itself. So in India, there would be no tax. But if you are in India now, if you are a resident, tax resident of India, then your global income is taxable. In that case, what you need to do is you need to show that, in UK, I have earned this income on which the tax is already paid. So you will get a deduction of the tax paid. So as per the DTA agreement, you don't need to pay the tax again on the same income.
Okay. And one last question, sir, probably. I heard from the attendee says, I heard from most of the bank that all foreign investment into India for stocks and shares was stopped on 31st August. So is this information correct?
No, no. India is inviting NRIs with open arms. The process is very seamless. Everything is online. You can easily invest in India, especially for UK. For US and Canada NRIs, there are certain restrictions for investments in India. However, apart from that, for UK, everything is very simple. Everything is online, and you can easily invest in India. There are hundreds of different investment avenues available. You can get in touch with us, and based on your needs, we can suggest whatever is advisable to you, and we can plan the taxation part as well and the investment part as well.
Yes. I think I have tried to tried to get the solution for almost all questions. But still, if anyone is having any question or anyone is not able to post your question in our Q&A box, then please WhatsApp us or email us. We will definitely try to find solution for you, and we will definitely try to help you. Uh, Thank you, Sagar sir, for such insightful overview and enriching our knowledge. I would like to thank GKFS for arranging this webinar specifically for NRIs to solve their queries, to try to enlighten on their needs for financial planning. And yes, as I said, we will be sharing one handbook to all our attendees, and we will offering you one-to-one meeting. We will offering you one-to-one discussion with our expert panel after this webinar. So we will be getting touch with you for that soon. Thank you everyone for joining this webinar.
Thank you, Prajakta.
Yes, thank you
Thank
all.
you.
Thank you very
Thank
much.
you.
Yeah, have a good day.